of the European Investment Bank, the investment arm of the European Union, and of course, his reputation precedes him, and he has stoically endured the indignities of our Larsen ecos for the past few minutes, but now we're back on track, so apologies for these tech issues. So without further ado, we're handing the floor now to the man they call the father of green bonds. And I think you guys in Luxembourg, the EIB, literally beat your peers at the World Bank by a few weeks. So you guys are officially the fathers of the green bonds. And I think the World Bank followed you, I think 3 or 4 months later. So it's about, not only ESG and asset ownership, but also how can one be a pioneer when the odds are against you? So what does it take to innovate when an issue is not fashionable or à la mode, as we say in Gallic parlance? Without further ado, I'm handing the floor to Bertrand de Mazières.
Thank you very much, Nicolas. Dear ladies and gentlemen, and possibly dear Mr. Larsen, it's a pleasure to participate to this G20 Pensions Forum, especially as the theme of the day, the role that asset owners and pension funds can play in the transformation of capital markets into an ESG force is not only fascinating, but is also very close to the heart and the action of the European Investment Bank, and also on a personal level is close to my heart as a CFO of this institution. I will not go into much into the creation of the green bond, but rather I would try to give examples and illustrations of a complementarity of the action of the European Investment Bank with that of you institutional investors. But first of all, I would like to mention that I'm speaking today when my institution just published the results of its 4th opinion survey on climate change. And you can find the result of this survey on our institutional website. And I will just evoke 2 of its findings. The first one is that 81% of European citizens think that climate change is a challenge of the 21st century. I think that the EIB fully agrees, and I think that all of us here will agree. But unfortunately, maybe 55% of EU citizens think that the country will fail to significantly reduce its carbon emission as pledged in the Paris Agreement. Interestingly, because our survey covers the entire the globe, interestingly, only 7% of the Chinese citizens seems to share this pessimism. There is definitely pessimism there, and I think that the duty of the EIB, and certainly something that we have to collaborate upon, is to prove the European citizen too pessimistic. Nevertheless, it's true that there have been so many events, devastating events, like the fires in California or in Greece, the flood in Germany and Belgium this year, that it is true that the writing is on the wall and that pessimism is possible. On the other hand, the economics of renewable energy have improved tremendously. Solar power is now the cheapest form of electricity in history, and over 90% of power generation capacity added in the world last year was in renewables. Definitely, the challenge remains, and you know that the United Nations described the climate crisis as a 1 trillion challenge. The good news is that across the globe, capital market players and financial institutions have responded with solutions, and the cooperation between all market participants and public authorities is already well advanced. I'll give you 2 recent examples that show that this cooperation is now entering really into very specific but very operational considerations. The first example is the the recent report released in July by the PRI, the UNEP Fee and the Generation Foundation, that is actually dubbed the Investing for Sustainability Impact, a legal framework for impact. And this paper in particular covers a very important topic, that is the measurability of ESG impact. So the issue is not, everybody agrees that impact is needed, but now the issue is really to measure it significantly, and I would say in a relevant way. The second example of how this players is developing is the OECD report released on the 4th of October this month, so this year. That is a report on ESG investing and climate transition. And this report in particular insists on the need to foster global interoperability and comparability. And indeed, and that's, I think the report is quite right, we are now at a risk of being a bit drowned into too many systems, too many regimes, too many ways of measuring impacts. And what is important is to keep in mind this need for a greater alignment of environment metrics with a low carbon transition that otherwise we will be lost, and I think you global investors and us global players will be lost in too many regimes to abide at the same time. Indeed, ESG is definitely not something limited to a few vertical sectors or early adopters. It is an issue that cuts across every geography, every sector, and you know that our investors, those who buy EIB bonds, those who place their money with you, have definitely concluded that the systemic ESG risk requires collective action. And it is definitely something that we have in common. This need to be collective and not limited to a segment of the market, be it geographic or sectorial. So now I'll speak a little bit more of EIB. You know that EIB is the Bank of Europe. Actually, I shouldn't say the EIB only, I should say the EU Climate Bank, because that's also another official role that the EIB took and that the EU gave to EIB when the new Commission, the Commission under Mrs. von der Leyen, took office a couple of years ago. It means that much of our work at EIB focuses on fostering the global market for climate finance as part of, again, the contribution to the EU Green Deal. And this contribution to the EU Green Deal is actually a contribution to the UN Sustainable Development Goals, because the EU doesn't ignore at all that it is an important framework within another and much larger international background. In November last year, being the EU Climate Bank, our board, the board of the EIB, approved the Climate Bank Roadmap commitments. Climate Bank Roadmap is a very bureaucratic name, and I'm sorry, we are part of Europe, so we have a talent to give very bureaucratic names to grand ambition. But Climate Bank Roadmap is no other than the EIB strategy for as a climate bank. There are key ingredients in this pot, and I'll list them rapidly, but very important enough to be looked at. The first one is Paris alignment, meaning that all new business, all new projects that EIB finances, and this since the 1st January this year, has to be aligned with the goals of Paris alignment. And so every project will be analyzed under this light. The second important element of the strategy is scale. We want to contribute to 1 trillion of investment for climate action in this decade. and meaning that we will ourselves invest at least 300 million of our funds into climate action, because typically we cover 1/3 of projects. We want to increase also the green share of our activity. So that's the third element I want to mention. More than 50% of EIB's annual financing will go to green investment by 2025. Actually, we are not very far from that. We are already at 40%. The fourth element is that we commit to provide more green advisory services, especially for the development of innovative low carbon technologies. We commit, and I'll get back to that later, to continue to support the sustainable finance capital markets. And that's very important, we commit to phase out fossil fuel. At EIB, and this view was a view of our board, representing all the member states, I insist on that. The view of the board was that the implementation of the Paris alignment is impossible if governments and private sector don't stop financing fossil-based energy. So we decided in November 2019 to apply this exclusion. We grandfathered, to be honest, a few projects that were already in our pipeline, but the grandfathering period stops now, starting in 2022. Oil and is definitely out of on coal, not mentioned, but it's definitely out of our rates. All these commitments also requires that we have to improve our tools and to develop additional climate, environment, and social risk management tools to assess actually the risk at the level of every project, on the portfolio level as well, and more importantly, not only to look at the risk of the project, but also to look at the risk profile of the sponsor of the project, so the client in its entirety, and not only of the client to view through the lens of one project only. Now, to give you a sense of what this commitment means, in 2020, the European Investment Bank provided 24.2 billion euros to fight climate change, which is 37% of what we did last year. And we also offered over environmental sustainability finance for approximately 2 billion. So this is 3% of what we did last year. So once again, the 40% figure achievements that I already mentioned. Innovation is a key component of this action on climate. Actually, we cannot. That's really also our view at EIB. You cannot have a good climate action with a boost to innovation and to a boost on innovation that aims at combining the potential of green and digital technologies. And there, Europe has an advantage because, I don't know if you know that, but Europe has 76% more patents than the United States and 4 times the amount for China in this intersection of the digital and green domain. So we will continue to certainly finance innovation, and actually innovation not only helps climate, but helps not only the E, but also the S. And one example there, as you may know, the EIB was an early supporter of BioNTech's vaccine development, and with the help of the European Commission and of the COVAX facility, so against this coordination with the international actors, COVAX, the European actors, official actors, the Commission, we supported the deployment of vaccines against COVID-19 in 92 middle and low-income countries. So we will continue to be at the center of delivering development finance for the EU. This means that we adhere not only to the fight against climate as such, but also all the other commitments that are needed to make this world better in ESG terms, and in particular for what regards, for example, gender action. And we recall that the EIB was the first international financial institution to join this initiative launched in 2018, sorry, by the G7. This initiative is called the 2x, it's a bit strange, 2x challenge, invest in women, invest in the world. And we joined this alliance in 2019, and now I'm quite happy to see that other IFIs are doing the same in 2021. Because I'm in charge of this part of the EIB activity, let me also say a few words on the integration of ESG into EIB funding activities. Indeed, I think Nicolas said that many times. We inaugurated the green market in 2007. We started this with a clear commitment to transparency and accountability with regard to the use of proceeds. And these commitments that we took in 2007 actually became market standards, in particular thanks to the Green Bond principles that the EIB shared in its operation. Now we understand very clearly that investors' requirements are very important on the front of database reporting, fit for comparison, and for aggregation. And this investors' requirements really is driving us. It is demanding at times, I can tell you, but we understand the demand because it's also a demand often driven by regulatory requirements that also apply to us. In 2018, as you know, we expanded EIB's funding toolkit with sustainable bonds, social bonds, the sustainability awareness bonds. Their proceeds are allocated to various areas like water, flood protection, education, health, including COVID-19 related activities. And we extended the sub-eligibility to other environmental objectives with a strong S value, such as the protection and restoration of biodiversity. We are no longer, we used to be the largest issuer worldwide of green bonds and social bonds. We're now out of the league with the EU itself, with France and other sovereigns, with UK. So we are only still the largest issuer of green bonds among the multilateral development bank. But what is interesting in this action is that we issued in 21 currencies, making EIB able to act as an ambassador of the European Union to capital markets and to be the ambassador to capital markets of the EU drive for clarity and action in sustainability. And our experts, my experts in my team played an important role in the development of the EU taxonomy regulation. And we are now leading in the demonstration of how to apply this taxonomy, because and it is part of our, I would say, official prospectus. We apply the taxonomy for the allocation of our green and sustainable bonds, and we commit to apply the green bond standards. We think that taxonomy, although it is a difficult thing, is best way to fight against greenwashing. We are quite aware that this taxonomy should not become yet another geographical barrier. And this is the reason why we were extremely happy to see the EU create in 2019 the International Platform on Sustainable Finance, which this platform created a dedicated working group on taxonomies, co-chaired by the EU and China. And there's a working group on on corporate environmental related disclosures. And the EIB is part of these working groups, and actually the EIB is very happy with the Chinese. You may remember that the EIB and China Finance Society for Climate were the first to provide some sort of a translation sheet between EU standards, MDB standards, and China standards in 2017. So we used to work with them on comparability. So I don't want to be too long. I will not speak of other innovative dimension of my action as a EIB funder, like the blockchain bond we did this year, because I realized that I should speak a little bit more of G. First of all, G is important at EIB because the governance of EIB, I think, is quite good on that front. And I'd like to insist on the fact that, in particular, although not regulated like every other institutional financial institution, the EIB apply voluntarily compliance with all relevant regulatory requirements applicable to EU commercial banks. And in terms, and since I'm speaking of EIB governance, I'd like to finish with two, I would say, previews of what my governance bodies will announce at Glasgow. At COP26, first of all, the EIB Group will announce the formal launch of a detailed framework to cover the Paris alignment of our counterparties. We call this the PATH framework. It was approved only 2 weeks ago, and it will make the EIB the first IFI to really look at the entirety of the activities of its clients and to be ready to provide help to decarbonize the balance sheet and manage their climate risks. This PATH framework will apply in 2022 onwards. We will also, that's the second pre-announcement, we will formally launch the EIB's first dedicated adaptation plan, which is a plan that aims at bridging knowledge gaps with the provision of climate data to counterparts to help them to support smarter adaptation. We will try to bridge finance gaps, obviously, by working with the private sector, with institutional investors, to identify investment opportunities in climate resilient technology. And finally, we will make this a contribution to inclusive growth in the regions and communities that are the least able to cope with a changing climate. And for this, we will increase our local presence in emerging and developing economies. I think I'll stop there because otherwise I'll be too long. But again, my thread, I hope you follow the thread, was how we can work together.
Actually, there's one question. There's just one question for you that's on the floor. So I'm sorry that's you now, but we'll keep you.
Bertrand, thank you very much. We have one question for you from the floor that we'll lay at your feet now, but we'll keep you for the next hour so we can bring you as a questioner, and hand additional questions to you. But there's one question about what we French call, or French or Russians called l'étranger proche. So basically, you guys are contributing quite actively to the long-term financing of critical infrastructure assets in Eastern Europe, the Balkans, recently the Balkans, even North Africa and the Middle East. Just a few words about the importance of that for you.
Okay, first of all, Eastern and Central Europe is part of the EU. So for them, the action of the EIB regards them as it regards other parts of the EU. We apply the same rules, and we nevertheless we attach to this. And that's EU policy, by the way. We attach to many parts of these countries that are part of the EU. We tag them as cohesion. These are regions where we have some sort of a horizontal target, quantitative target to this target changes year after year, but to be ready to provide, I would say, a bit more finance there in these regions than in the more developed regions. For the close neighbors, that you mentioned that are not part of the EU. We paid attention to them already, and we have projects there. But the plan is to pay more attention to them. It is partly also in the second announcement we'll make in Glasgow, but it will take another form. Starting also in January 2022, we will individualize within the EIB group. It's a branch, we call it a branch that will receive special capital allocation, and this branch will be for non-EU action, starting with these countries.
Okay, I think Bertrand just deflorated that issue. And Chris has a burning question. Save it for Bertrand for in 1 hour time. But without further ado, I want to thank him very much for that brilliant. And in approximately 30 seconds, we are switching in 30 seconds to the other session while my colleague Olivier brings online Gert, and
I'd like to say a special thanks to Mr. Larsen.
Yes. He's a great Swedish, the great Swedish engineer, Dr. Larsen, as our main partner today, and that's why we are now double checking that everything is fine on that front. Double check that. Okay, so we're all good on the Larsen front. And you have a show. We're starting in 30 seconds now. Starting in 30 seconds now. Starting in 20 seconds now. Ten seconds now. And we're delighted to have you on board with us today, in spite of the technical complications of connecting Canberra, Toronto, and London in real time. But we're delighted to have you on board today, and we're going to start that session with a short presentation by Heiko Schupp, who is the head of infrastructure investment at Columbia Threadneedle Anglo-American asset management company. But first, a few words of greeting and introduction by the great Gert Dijkstra, who is joining us from Amsterdam today from APG.
Yes, bonjour Nicolas, bonjour à tous, good morning all. Great to be part of this G20 World Pension Council, and I'm very sorry I'm not joining you in Paris. Having said that, we're going to talk about infrastructure, about private assets and the climate finance dynamics in a few moments' time. And obviously, there's a lot to say about that, certainly in the foreplay of COP26 in Glasgow. Before I go on, I'd like to thank Bertrand de Mazières and the European Investment Bank for issuing green bonds. Typically, we are on the demand side, and we love to see more issues from green bonds. So thank you very much for your first all your efforts, Bertrand. Let's move to the topic of today. Again, a lot to say, and if I look back in the past few years, you can see that where we started with responsible and sustainable investing, or ESG, as being exotic, let's say 7 years ago, what currently is mainstream. It is a commodity to have ESG built in your investment decision processes. And we have, and most of the large global asset owners and asset managers have done that in the past years. So that's not anymore a challenge. Some other, I think, significant developments I'd like to mention before we introduce the panel are the following. What I see is that we still allocate more money towards the real assets. And basically there we fulfill our core duty, as financial sector to fuel the real economy. I see that we still are in the modus of investing more in infrastructure, real estate, private equity, natural resources, all with a responsible and sustainable approach. Some other, I think, for us important developments in the past few years are the following. I see that we join increasingly forces with other like-minded long-term investors, pension funds, sovereign wealth funds, endowment funds around the world. One of the reasons is that we want to share risk. Another one is to build on local expertise. But also, I think we're able to write larger tickets in a maybe a bit less competitive environment than when we stick in the mid-sized tickets for instance, infrastructure. Another important, you might say, I see in the past years, I see it within the Netherlands, but certainly also with the Canadian pension funds, that they are increasingly moving towards direct investments, cutting out the middleman, cutting out costs, cutting out fee layers, and then getting more grip on the governance of their assets. That's also something we do. We try to join forces with like-minded asset owners in all regions of the world, and together take a stake in the operating companies. For instance, when you talk about toll roads or ports or airports, those are typical examples of the area we like to find our long-term predictable cash flows. Having said that, one other significant development is that I see that institutional investors, as we are, tend to step in earlier than we used to do. And with earlier, I mean earlier in the life cycle. And then you talk about maybe more venture capital, startups, scale-ups. And we recently did that, required by our clients, to step into an energy transition fund, focused on the Netherlands, by the way. Not very large, but with three important drivers. The first driver, obviously, is to do sound investments with a sound return, but also to build an expertise center on technologies which will be the driving force behind the companies, not of today, not of tomorrow, but the companies for the day after tomorrow. So build expertise centers. And the third reason we see is that we build those strategies also to generate deals for typically other asset classes, like private equity or infrastructure real estate. Let me allow myself, and I hope Nicolas allows me, to have one other development mention. What I see is typically...
One more, that's perfect. Yeah. Then we'll move to Heiko, and then we'll have you again.
Yeah. Okay, sure. Well, the last one I will mention now is typically that we see increasingly a public-private partnership, especially in the topics we're talking about today, infrastructure, private assets. We do see in many countries that we do have to join forces with the public side, and that's typically increasing as well. Then, Nicolas, if you allow me to introduce the panel, let me start with Vincent Gaillard. Vincent Gaillard is the Chief Finance Officer and member of the Executive Office of Société du Grand Paris. We have also Kæraa Rasmussen, who is head of ESG for PensionDanmark, and he is also assistant lecturer at the Copenhagen Business School. And then, you already mentioned him, Nicolas, Heiko Schupp, who is global head of infrastructure investments of Columbia Threadneedle Investments. And I would suggest, indeed, to start, Heiko, with your presentation. Thanks.
Merci beaucoup. Merci.
Thank you very much, Gert. That was a fantastic introduction, and may I also add my welcome to everybody online and as well as in the audience. A very good morning to you, ladies and gentlemen. I will take you through a presentation which hopefully will give you a lot of fruit for thought, maybe also bearing in mind some of the topics that we discussed when you listen to the politicians and various other organizations in Glasgow going forward. But the theme predominantly is obviously infrastructure, sustainability post-COVID, and where we can really make a change by investing into infrastructure. On the first page, I think this is quite important because I just want to recap for a lot of you that already know infrastructure, maybe introduce to some of you that are not, what it actually is involved in infrastructure. So you're looking at any type of utility, electricity, obviously heating, wastewater, water, and so on, that provides you with essential services. There is a big sector which is mobility, and we go into all this, what that means for sustainability and decarbonization going forward. Which obviously land-based, sea-based, and air-based transportation infrastructure that we need to be mobile. There is social infrastructure, very topical, certainly with COVID and after COVID, hopefully after COVID at some stage, in terms of whether that is sufficient, whether we have the right provisions for those. Anything to do with energy production is clearly infrastructure. Not all of that would be investable, I suppose, from an infrastructure perspective, but it's certainly part of what a government needs to run a country. And more importantly, as we indeed see today, telecommunications. I speak to you from London via an online link, which obviously needs a connectivity and computer power to make this happen. What that all gives you, and what I think is still very, very attractive for investors, is it gives you long-term stable returns, and it has done for quite some time now. Frequently yields, but not always, but if you choose the right product, it will produce a very attractive yield compared to what you currently get in the market. A low volatility and also very little correlation to other asset classes that you're investing in, and selectively in inflation protection. So all of that still in the current environment, very, very attractive from an institutional investment perspective. Can we move to the next slide, please? So what's happening post-COVID? I think it's fair to say we will see an acceleration of all of these big topics and all of the sectors in terms of investment needs that we've just touched upon. And I think all of that is quite important to be seen as a whole and not necessarily segregated. But again, a little bit of more of that later. We very, very clearly, as we've mentioned, and this is focused on ESG, this conference, see an energy transition, obviously decarbonization, moving to renewable energies. We may need a new social contract. We will find that COVID has caused disruption in the way how we think about social services, about the adequacy of the services that we provide, and indeed may actually create a new need for services in that field. But again, it also may be connected to the energy transition. Transport and new parts. Just when we all got used to the idea that everybody moves into cities, you know, certainly in London, a lot of people have moved out of a city because they can all of a sudden work from home. What they need to that is a digital transformation, i.e. the platforms and the power to actually do this in a remote way, which in turn may have some impact again on the social contract or on the energy transition and on the transportation needs that we see. So I think you're getting the picture. It's all sort of spinning around in circles already a little bit in terms of where we need to start and where we will end. The next slide, please.
Next slide, Olivier. Thank you.
So if we look at the energy part, and I think it's sort of bearing in mind, I think if you keep in mind the 2-3 sectors that are currently impacting carbon emissions and therefore can be targeted to improve or neutralize carbon emissions. So in the European Union at the moment, you don't see that on the slide. I'll just give this to you as a very, very high level 2018 numbers, so they're slightly out of date. But if you broadly think in sort of 3 sectors that are predominantly causing CO2 emissions, you're looking at the actual energy production, which is the graphs that you see on the left, and how this is currently sort of working in terms of breakdown and who does what in the production of electricity. You have the second part, which is transportation, sort of broken down into private cars, trucks, and air and sea transportation. And you have the third one, which is industry. Now, 2 of them are very heavily impacted on what you do with your infrastructure investments, which is obviously the power generation and the transportation part of that. And if you look at the left side, is that obviously we're having a very significant drive to electrify absolutely everything. We should electrify our cars, we should electrify the way how we heat our homes, and so on. But if you look at the reality right now, I'm afraid the very vast majority in the EU of electricity production is still with fossil fuels, and there's a long, long way to go before renewables catch that up. Can I have the next slide, please? So clean energy underpins the transition to a more sustainable energy system. Yes, 100%. There is no doubt about it. We definitely need a very, very significant investment and future investment and growth in renewable energy. Without that, it is impossible to achieve any of what we're currently achieving. But at the same time, we also need to be conscious, particularly as institutional investors, that the environment of renewable infrastructure and in energy is changing. So here is some synergy between social impact and renewable energy. It is clearly showing that investing in renewable energy also creates more jobs. But there is a reason why that creates more jobs, because there are significant complex issues with operating these energy productions, and you are moving away from a payment, which used to be a feed-in tariff, which was very, very simple, into power plants that are now competing or basically feeding electricity into a grid. And you're talking about a much differentiated risk profile when you invest in these projects that are requiring a significant amount of management skill and management input. One could also argue that somewhat the risks have increased by the falling away of these feed-in tariffs and these actually becoming viable energy sources for the future, whilst at the same time the returns have actually reduced significantly. So an interesting dynamic as far as investing in renewables is concerned. But at the same time, it is needed. It needs to expand exponentially if we want to have any chance of meeting our targets in carbon neutralization. The next slide, please. So I think the important bit is also not to forget about the other third that we need to focus on. So if you think about the investing into renewable infrastructure as just a source of creating electricity, you're only touching 1/3 of the actual polluter, if you like. The other third we've got here in front of us, which is predominantly passenger road vehicles, but very significantly also freight vehicles, and actually to a lesser extent, shipping and aviation. So if we focus on the road-based transportation, 25% of direct CO emissions globally, and largest in the EU, actually, even above the carbon emissions that you see from the production of electricity. So if we just all focus on one end of the market, we will not be able to achieve these targets. So a selective investment just in renewable energy may not be getting us to where we need to be, bearing in mind that some of the technology may be challenging going forward to introduce. Passenger road vehicles, you might be okay. Freight, completely different story. Electricity, not really the answer for that, and certainly not for shipping and aviation in the short term. We need about a 90% reduction to meet the EU goals by 2050. The next slide, please. So the opportunity in decarbonization and transition, existing infrastructure needs to be addressed. That there is no point in just ignoring it and sort of saying, look, let's just all invest in renewable energy, because it will not get us to where we need to be. We do need to look at services that still need to exist. Shipping, for example, not possible to change overnight, and not possible by just investing in electrification and renewable energy to remove the impact from it. Electric cars, a different story, but one of the things that kind of frightens us from being on a day-to-day basis involved in investing in energy and in transportation is that the investment in the grids that is needed to actually make these electrifications on the transportation and on our houses possible is just not forthcoming, because everybody is just focusing on the production and not on the infrastructure that's surrounding the production that is needed to do that. I've joined a conversation with the large utilities about 3-4 years ago, where their view still was that you can get to about 30, maximum 40% of renewables in a grid before you will basically get a technology challenge to balance the grid and be able to guarantee undisrupted energy supplies, because of the obvious nature of renewables, that they're not available on the press of a button. Battery technology and other storage technology, for example, hydrogen, may take some of the strain on that, but it is going to be a very, very close race between us reaching that capacity on technology and grid, and our ability to store electricity. And what we mustn't forget is that some of these services, we've got here a ferry service that serves the Channel Islands, which happens to be one of ours, but without these ferries, these islands cannot exist. The communities will simply cease to exist, because 80%, 85% of all the goods consumed on these islands are on that ship. There's no technology that can currently change the diesel technology of these vessels. Sorry, move on to the next one, please. So electric vehicle rollout, look, you will have seen this tons of times. I'm not going to spend too much time on it. There's always the chicken and an egg. Do we need the infrastructure first before the vehicles come? Do the vehicles come first and then we roll out the infrastructure? But again, we do need to be conscious, if we just go a couple of slides back, that just buying an EV car does not necessarily create carbon neutrality when you look at an environment where over 2/3 of the electricity is produced by carbon and fossil fuels. And if you actually looked at the statistics there, some of them in the last 5 years have increased in production, not decreased in production, despite the significant increase in renewables. So there is a lot of publicity and a lot of, let's call it maybe marketing, but if you scratch the surface a little bit, it's not all quite as straightforward as it seems. Nevertheless, I still believe that is where we need to go, and that is what we need to do, but just be a little bit conscious to just sort of rush in and think this is the answer to all of our problems, would be my recommendation. Next slide, please. What I want to get into a little bit, and also as a thought generator, is hydrogen. There's a lot of talk about hydrogen at the moment. I think from an investability, as far as infrastructure is concerned, it is challenging because it is in very, very early stages. But as you will have known, and you will have heard this from others, as far as hydrogen is concerned, we need to talk about green hydrogen, i.e. hydrogen that is produced by a green source of energy. And to make this basically in any shape or form competitive at the moment, we would need to see a further decrease in costs of renewable energy by 80%. Now, this slide tells you that the costs already have decreased by 80% in the last 10 years. So there has been a very, very significant gain in terms of the costs of green energy that we produce, but we need a further reduction to the same extent that we had in the last 10 years for this, under the current technology circumstances, to be feasible. Can we move on, please? And this is sort of what I'm talking about. This is where your green hydrogen currently stands. You see that big bar in renewables H2 in 2020, and a breakdown in where these costs actually come from. Unbelievably, a very, very large portion, nearly half of it, is currently taxes and levies, which you will have to face to look at producing this hydrogen. And we're looking at the right-hand side where you see these projections. You can forget about taxes and levies. They have to fall away straight away. And then the big one, the 3.3, is the reduction in renewable pricing of electricity to be able to actually get to a competitive way of producing green hydrogen, to sort of use this as a future electricity source. Next slide, please. And this is sort of the scary bit, I suppose, that all kind of stops us in our tracks to sort of think this is an easy win. I still believe that hydrogen is the future, and as far as transportation is concerned, certainly for heavy goods, aviation, and shipping. I also believe that it is an incredible way of storing and transporting energy, which maybe gives us the opportunity to actually produce energy elsewhere, and then use it in the centers where it is needed, which would give us an equivalent to what we currently have, where oil production and coal production obviously happens in part of the world that they're not necessarily corresponding to where the production actually lies. Is certainly the case if you look at Europe. The scary bit is that you need 2 gigawatts of renewable energy to produce 1 gigawatt's worth of energy in terms of hydrogen. So clearly currently not very efficient, and certainly not at all doable given that we already have challenges with energy production, which is renewable in the way that we need to produce energy for our homes, for our industries, and for our transportation. However, the increase in demand is on the bull scenario will increase by about 20%. And the timeline is also quite interesting. Your best case scenarios are the light blue lines, which show you when we can expect a real impact of these technologies on the sectors that we there see. Next slide, please. Look, I think I'll just leave you with a very short summary. I'm definitely out of time in my presentation. What I was hoping to do is giving you a little bit of food for thought, that it's not so easy. It's not straightforward. It's not just investing in one bit. We need to make sure that we look at a social contract. You can't price people out of the market by having too expensive energy. You have a social responsibility to the people that live in your countries and in your areas, that you can't create fuel poverty by doing that. We have to invest in the actual infrastructure, in electricity grids, in transportation, in storage of electricity, to enable our grid to take more renewables. We have to invest in renewables more so than ever before. And we also have to invest in transportation and social infrastructure, and also into digital infrastructure, which in itself has actually an impact on the way how we use energy, and how we communicate with each other and how we live with each other. So it's a very, very big challenge, and that is just the infrastructure sector as an investment opportunity on its own, and leaves out the other third that creates CO2 emissions, which is industry. So I'll thank you for your attention so far, and I'm sure we will have some interesting debates going forward.
Thank you, Heiko, for that great introduction and presentation. And now from London and Frankfurt on to Copenhagen. And I think we're moving now to Kæraa Rasmussen, who is the head of ESG at PensionDanmark. And I'm going to ask Kæraa basically to tell us a few words, because really we have many pioneers today. So earlier was Bertrand and Mazières, but now everyone is speaking about the race to net zero and how the world should invest in ESG-driven infrastructure. But really, PensionDanmark has been a pioneer in Europe in that field, because very, very early on, they started for every person enrolled in their pension fund to allocate a certain amount of money to renewable energy, and notably in the North Sea and the Danish Sea, to wind farms. And it's really exceptional what they have done that early on. Without further ado, I'm going to ask my colleague Olivier to launch Kæraa on the main screen. Not all of you can see it, but you can hear him. Kæraa, the floor is yours.
Thank you very much. And I certainly echo very much what has been said in the presentations from Heiko, and also the introduction from Gert. I think there are really a lot of interesting and noteworthy points made already. So my contribution will focus a bit on our history, and maybe there are some lessons to be learned, and it can inspire some. We started in 2010 together with Asst, Danish big utility company. Then we had half of the first offshore wind farm in the Baltic Sea, just south of Denmark, in the Danish national waters. And it was a good experience for us. So we were ready to build another and much bigger wind farm up in Kattegat, also in the Danish national sea. And also this was a good experience. And I can say from these two early investments, we experienced exactly what Heiko showed on one of his first slides: stable, consistent, not totally foreseeable returns, but pretty stable returns, and returns that was much higher than what you could get in a low interest rate investment universe. And this is, to be honest, one part of the reason why we entered into renewable energy investing. It was because in the aftermath of the financial crisis in 2008, 2009, the interest rates were so low that we thought that we could not earn the necessary returns from a lot of allocation to bonds. So we needed to find a replacement with a defined contribution scheme, and we could take risks, and that's why we entered into renewable energy. We got the opportunity, it was a window opportunity in 2012 to gather senior executives from the Danish energy sector, and we were the founding partner in a special purpose investment vehicle called Copenhagen Infrastructure Partners. And this vehicle, CIP, has now grown into be the world's largest investment fund in renewable energy.
And can I just stop you for 1 second? So before you became co-founding partners of what is now one of the world's biggest such investment vehicles, correct me if I'm wrong, but before that, you guys did your own direct investment on your own, and only later did you decide to join forces with that big GP, right?
Yes, it was. We had 5 wind farms. We didn't own them 100%. We owned 50%. We had a 50% stake in 4 of them and a 30% stake in the 5th one. And they were onshore wind farms in Texas and offshore wind farms in Denmark.
Right.
But we wanted to enlarge our investments in these renewable energy, and we got this opportunity when senior executives from Ørsted, we could meet with them, and we could establish this special fund vehicle that I'm talking.
So it gave you scale, right? It gives you bigger scale.
It gave us, first of all, it gave us admittance to world-class expertise within offshore wind. And that was what we got in this fund. It was in Danish legislation, we could not take them in-house, so we had to create it as a fund vehicle, and that we were in the first fund, nobody dared to co-invest with us. So the first one we made was we were the only investor.
Because back then the risk-return perception of green infrastructure asset was very different from now, right?
Yes, and it was perceived much more riskier than it actually was, and that's why I also pointed to Heiko's slide. And I think the mainstream investors today, they're not afraid of owning parts of wind farms offshore or onshore, whether it is in Europe or US.
Because now, you know, greenium, as they say in Luxembourg and the city of London, greenium today is a luxury, but
Yes.
you have to remember that not long ago, it was actually the opposite. It was considered very risky, right?
Yes, and you could say if we move fast forward now, this investment vehicle has some commitments of some 16 billion euros allocated to 8 different funds. We in PensionDanmark are the sole investor in 3 of the funds, and we are the largest investor in the other 5 funds. But we have, through that vehicle, received commitments from some 100 investors around the world, and by the way, also from EIB. They are also investing in one of the Copenhagen infrastructure funds. The European Investment Bank is an investor in one of the funds as well. And if we look a bit to the future and perspectives, it is for us to move a bit up the risk return curve in renewable energy, and that is to expand investments in geographies away from the OECD pretty safe geographies to emerging markets. Here the risk appetite is definitely much lower, but you could also say that the possibility to harvest high development returns is much bigger. And the other dimension that we will expand into is building new technologies. There is a fund and created ETC fund where the focus is very much on power to X, and power to X is in fact, you could say, excess electricity from wind farms or solar PVs that is used to make green hydrogen, then again could be made to make green fuels for heavy transport, which was also a part of what Heiko said before. So new technologies, new geographies, emerging markets, that's where we want to develop now, because we perceive that the return opportunities are better there than they are with, let's say, matured renewable energy infrastructure in OECD countries.
Right. That's great. We're going to keep you with us because we have some questions for you from the floor, which we'll ask you in approximately 12 minutes. And before we move to Vincent Gaillard, so we're moving to Vincent Gaillard, who's in Paris. I want to go back just for 2 minutes, just 2 minutes to Amsterdam. Just for a comment from the part of Gert, if Olivier can bring him on the main screen for us. And so before we move to, and I'm saluting here my Gallic colleague, Vincent Gaillard, who you don't see, but you'll be seeing here in a few seconds here. So the questions some people had for you, Gert, is the following. You guys are really, of course, amongst the biggest, buyers of these green bonds, social bonds. And I think recently the European Union made an issuance of which you guys were, I think, the number one or the biggest, I think, buyer. So clearly you're very active along all the asset classes spectrum. So I just wanted your comment regarding the fact that, what Jan said earlier, that there was a time when these assets were perceived as illiquid and risky. And if you added green or ESG to illiquid and risky, it was even riskier. That was like 6-7 years ago. And now things have flipped completely with greenium. So what do you think of that? Do you think that the greenium is there to remain for the foreseeable future, in your personal opinion?
Yeah, thanks for the question, Nicolas. Just a few reflections from my side. Number one, obviously, driven by the sustainable and responsible investing policy of our clients, we are very much interested in green bonds. We were already there when, I think they were the first, the French government issued, I think 3 years ago, for the first time in Europe, the green bonds. So yes, we are very much interested. At that moment in time, and I think that's relevant for answering the question, we made an analysis where we looked upon we compared the non-green bonds from the government and the green bonds in terms of risk and return. And at that moment in time, there was very, very, very little difference between that. So that made it for us a sound option to step into green bonds. Looking forward, because that's the true challenge, I think we are heading for a period where we have to wrestle with getting the proper data, making the proper analysis, getting the right reporting, whether the green bond is truly green, or Bertrand also mentioned the word greenwashing, or are we in the corner of greenwashing? And we typically embrace dark green bonds.
And with that colorful metaphor, I will now hand the floor to my Gallic colleague, Vincent Gaillard of the Société du Grand Paris. And I think you guys in Amsterdam, you guys APG, are everywhere, because I think you're also I think holders, happy holders of green bonds issued by the Société du Grand Paris. And according to Bloomberg, I think it was last year or 18 months ago, you guys at SGP were the world's leading issuer of green bonds. So it's really fascinating to see France really at the forefront of that intersection where fixed income markets and infrastructure meet. And right at the middle of the intersection, we have Vincent Gaillard. Vincent, the floor is yours.
Merci Nicolas, thank you Gert for your introduction, and thank you Heiko and Kæraa for your interesting presentation and comments on recent market development. Yeah, it was last year. The guys at EU did a fantastic job this year, so I mean they will probably...
You beat him.
No, before sharing with you two thoughts, I would like just to introduce a little bit my project. So, Société du Grand Paris, SGP, is a 100% state-owned infrastructure company set up by the French government in 2010 with one sole public mission: to design, build, and finance a new metro infrastructure around Paris. This project, called the Grand Paris Express, is among the largest ongoing infrastructure projects in Europe so far. This is 200 kilometers of new automatic metro line around Paris with 68 new stations for an estimated 3 million passengers per day at completion. Basically, our challenge is quite clear. It's to double the existing size of metro network by 2030, which is the date of the full completion of this infrastructure, the Grand Paris Express. Where do we stand now about my project? I mean, we have 19 tunnel boring machines digging below Paris right now. We have already digged more than 60 kilometers of tunnel, and we have more than 7,000 people working on 130 construction sites all around Paris. This is, of course, a mass public transport system with a travel loop connecting towns and reducing transit via downtown Paris. It's the first time that's happened in Paris. Connecting international airports, but also train stations, and connecting also all the business and research hub around Paris. We're talking about the La Défense district, but also the French technology valley at Saclay in the south part of Paris. This is also a social project because it will reduce commuting time and will allow people to have access to more jobs thanks to a reliable and high-performance network. But this is also a urban development project. Just to give you an example or an illustration, if you take 800 meters around all of 68 new stations, you end up with a total area that is 1.5 bigger than downtown Paris. So it's a massive area for urban development over the next few years. The main benefits are twofold of this infrastructure. Of course, from an economic standpoint, job creation during the construction, I already mentioned the numbers, but also thereafter. We estimate that more than 115,000 jobs will be created directly thanks to this infrastructure. This is also a GDP creation because we also estimate that at full completion by 2030, this infrastructure will generate an additional 10 billion GDP per year to the Grand Paris region. It's also, of course, from an environmental point of view, a big change for all the Parisians. Of course, it will drive modal shift from private cars to metro, of course, but it's also a way to move to a compact and transport-oriented urban development. These two elements will lead to a reduction of GHG emissions estimated between 27 to 51 billion tons of CO2 over the whole cycle of the infrastructure by 2070. This project, the Grand Paris Express, with a targeted cost of 36.1 billion euros at 2012 financial condition, is financed through local fiscal resources directly allocated to SGP, roughly 750 million euros per year, and also by the ability to raise debt. This ability to raise debt is key to the project because it allows us first to reduce the construction period, but also to secure the whole environments and all the actors involved in the project. I'm talking about visibility for all the industrial companies that are working for us. Without this ability to raise debt, it would have taken us probably more than 40 years instead of 10 years to fully complete this infrastructure, this new. So that is the reason why we decided in 2018, 3 years ago, when the construction started and when the first external financing were required, to fully align our financial strategy with our assets and with environmental benefits with a strong commitment. At that time, we were the first issuer to set up a 100% green EMTN program with a commitment to only issue green bonds with the highest standard possible.
What year was that?
In 2018.
Okay.
And with complying with the highest standard of the profession of the market, and also with a commitment to publish an annual impact reporting. Since then, we launched inaugural issue in 2018. Since then, we have raised 20 billion euros of green bonds through the creation of a credit curve of public liquid benchmark, ranging in terms of maturity from 10 to 50 years. We can say that at that stage, we have financed roughly 60% of the total estimated financing that we need for this project. If we look at some of the stats in terms of investor distribution, an interesting point is if you take the part from pension fund, caisse de retraite or insurance company, you end up with roughly 20% of the total investor distribution in our bonds. Okay. And of course, the longer the maturity are, the bigger this participation is. So it's probably the first thought I want to share with you this morning is the fact that somehow this is the illustration of the perfect match between an infrastructure issuer and the pension fund industry. On my side, I look to secure a long-term financing at the more efficient cost possible, especially thanks to the international debt capital market, directly to investors that are on their side looking for high-quality, long-term and impacting assets. SGP was designed as a public agency with a top quality issuer, with a rating aligned with the French state for a long-term and strategic infrastructure, and with liquid green bonds offering, with calculated carbon footprint that allow each investor to know how many GHG emissions they will save by investing in our bonds. The second thought I want to share with you is about innovation, as Bertrand mentioned earlier, is the fact that, sorry to have to say that, innovation in our current environment is not an option anymore. But when it comes to the environmental benefits of your project, you cannot be innovative on your liability side if you're not perfectly confident about the quality of your assets, of course. This is where I think green or sustainable finance can play a key role in the recent developments. It helps to remain innovative within the whole cycle of infrastructure, especially during construction for us, and not only to make sure that you deliver the benefits that you initially claimed, but also to go even further. At Société du Grand Paris, we have developed a full sustainability strategy behind a 100% green bond program. Let's take a few examples. For instance, we introduced environmental and social contractual clause in our procurement strategy. A minimum of 20% allocated to small and medium-sized companies, a significant part of the job to be done by unemployed local people. And
so local at municipal, county level, department?
Yes.
How do you define that local? Exactly, the place where the construction site is.
Yes, okay. And another example, we have also some carbon footprint reduction bonuses for the most innovative companies that are working for us. On the industrial side, I mean, we boosted the introduction of low carbon concrete. We also worked on the optimization of excavation spoil with some commitment towards 70% of this spoil recycled or 15% shipments by train or by river to avoid, when it's possible, the 100% truck. And a last example is also the fact that we are also some strong commitment towards biodiversity. It was the theme of our last green bond reporting that we published 1 month ago, with zero net loss targets and ambitious offset measures. So basically, at the end of the day, I could have financed this infrastructure through conventional bond. I think this would have not changed its environmental benefit, but being 100% green issuer would definitely help to make it more sustainable.
And now that there is so-called greenium in capital markets, does it mean that you're a happy borrower because you're borrowing at a slightly lower risk-adjusted rate? Is it true?
Being 100% green, I cannot say really that, but I can show you it is the case because at the bottom of that, of course, or at the top of that, of course, it definitely helps us to achieve a more competitive cost of funding. So basically, on both sides, my liability and my assets, it can be a win-win situation.
It's great. Yeah. It's really great, and I think we have, we have a few questions for you, but you may stay here maybe, and maybe I can ask Olivier to bring back Gert Dijkstra on the main screen, on the main Zoom screen. Yes, I think we can see you. And yes, so now from the issuer to the asset owner, basically, what is your perception, Gert, in terms of seeing more public or semi-public entities across Europe, issuing more green bonds and social bonds? What is your perception of that dynamic? And I know that you guys are amongst the biggest buyers of such instruments, right?
I'm not sure whether we're the largest, but we are quite a significant buyer of green bonds. And I already explained it perfectly fits into our sustainable and responsible investing policy and those of our clients. Having said that, Bertrand de Mazières also already stipulated that we should be very careful with to think too easy about green bonds and walk into the pitfall of greenwashing. Having said that, we typically would support increasingly issuing of green bonds by companies, by public-private entities, by public entities, all because, one, it fits perfectly in our ambitions. Two, what's probably even more important, it really supports the transition to a new world where we try to strive for a net zero environment. And I think that Vincent also mentioned a few really important things. Let me pick out one thing about concrete, for instance, using far more environmental friendlier ways of building and constructing. And that will be stimulated by issuing green bonds, because there is also an incentive for the ones who issue the green bonds to act and behave accordingly. So that would be my thoughts about it.
Great, that's great. And perhaps Olivier can bring back Kæraa to the main screen, and we'll ask, I'm filtering out here the questions that we're receiving via Zoom and LinkedIn and audio, but perhaps one question to you guys, starting with Vincent. So the question I received is, for example, okay, so there are green, environmental, social metrics or concerns or demands. You mentioned that 1/5, right? 1/5 of the work into a local construction project will go to local SMEs, right?
Yes.
And perhaps certain percentages will go to unemployed workers and engineers, blah, blah, blah. But Vincent and then Kæraa, how do you check? Who checks? Who comes to these small towns in northern Denmark where you have the wind farm, or in that village in Normandy connecting the rails, to check that effectively 20% go to SMEs
and X% go to ethnocultural minorities or unemployed engineers? Who does the verification and how often? Vincent first.
I mean, this is our duty to have a reporting based on the information coming from all the companies. When it comes to 20% of our procurement to medium-sized companies, I mean, it's easy to check. When it comes to local people employed, I mean, it's probably a bit harder, but we also have a reporting with all local authorities to be sure that these measures are put in place.
Okay, great. And you, for example, Kæraa, in Denmark, how do you do that? The verification, please.
Yes, I don't think we have exactly the same targets, but what we try to achieve is that at least in our part of the world, all the construction activities that we are builders in or involved in, they are covered by relevant collective agreements. So there will be no social dumping. And also we want to ensure that the relevant number of apprentices are taken in order to get good education to youngsters. So I think that's where our social responsibility is most impactful when we are builders. Yes, of course, we also have environmental demands with respect to materials. For example, in our buildings, the one real estate that we are building right now, we want to have more energy efficient or climate friendly cement, which Gert mentioned before. There is a new type of cement called future cement that can be bought on the market that has a 30% lower CO2 emissions than usual cement. So we try to only use that material now. We also want to use woods as much as possible as a building material. So,
right. Okay. That's clear. That's clear. I mean, perhaps we should ask questions or commentaries or comments to Gert and to Heiko. So if you could bring on Olivier, please, Heiko on the main screen. And then we shall leave the concluding remarks to Gert. Yeah, so Heiko, the question I had for you, how do you do the auditing or double checking? So, you put money in a bridge or highway or wind farms, but how do you make sure that when the money goes somewhere, it's really being verified and these metrics, these ESG metrics you're looking at are effectively measured, quantified by a third party, an independent third party? How do you do that?
So we're currently deploying our own in-house proprietary system that captures all SDGs and basically quantifies them. It's actually based on the Dutch government's system, which we slightly took and modified. We thought that was the closest, and be interesting to get Gert's view on that, and one that was easily adaptable to measure infrastructure impacts on SDGs, and basically create what looks like a spider web where you want to have everything expanded to the outside in terms of that. And we are working obviously with the usual certifiers and external audits to sort of make sure that our systems are in line with their expectations and their ratings to do so. So in addition to that, we incentivize the management of the companies that we're working with along the same objectives. So they not only have objectives to produce outputs that are financial, but also outputs that are focused on the SDGs.
Thank you, Heiko. And now on to Gert for the closing remarks, and maybe if he has an opinion or perspective on the notion of auditing, measuring, verifying, in-house, third party. How do you guys do it?
Merci, Nicolas. Thank you. Please allow me 4 brief points summarizing and finalizing this panel. Number 1, as Heiko mentioned, we have been, for a handful of years ago, the pioneers within a benchmark for real estate that was called GRESB, G-R-E-B. And the follow-up was that we tried to do the same thing for infrastructure. So we're working on a global benchmark for infrastructure, which we think might be a very well-chosen instrument to incentivize investors and operators to reach a high degree of sustainable, energy-friendly infrastructure development. That's one. Number two, I think that, and that's for all assembled here, I think that the asset owners and asset managers should take their responsibility, and we do, I think, with regard to energy transition. Don't walk away from responsibility to engage with companies, to engage with corporates. And Vincent gave beautiful examples of how they are doing that in Grand Paris. And I think that that's an important message. Don't only divest, but also engage and try to find ways to move projects, corporates, operators towards a more sustainable and responsible operating. That's number two. Number three, obviously, I like to thank Vincent, Jan, and Heiko for contributing to this panel. And the last thing I like to say, Nicolas, I'm really very sorry I'm going to miss that Piemontese Provençal buffet you're going to have in a minute. So I'm really sorry not to be able to join you in Paris. All the best for the rest of the day.
Merci, Gert. Thank you for a great panel. Merci beaucoup. Merci, Heiko. Merci, Vincent.